A sobering report from the FDIC, which insures all of our money. 63 American banks on the brink of insolvency. Coming out this week. The culprit? Unrealized losses on investment securities increasing by $39 billion in just the first 3 months of this year. A lot of this stuff goes over my head. So we bring in economists E.J. Anthony and Hillary Fordwich to join us now. Good to see you guys. E.J., we know that commercial office space is this really big threat, and the debt around this country, the household debt's a really big threat. This is a different one. Can you explain exactly what this means?
Oh, sure, Rob. Essentially, what banks do is they take your deposits, but then they turn around and they loan that money out to other customers. And that's why a lot of people have both a checking account as well as a mortgage. And essentially what's happened here is they have these liabilities, deposits, paying higher interest rates than their assets, things like mortgages. So mortgages that are at a 3% rate, for example, are a problem when they're trying to pay depositors 5% interest. And so they have negative cash flow.
That makes perfect sense. Hey, Hillary, we also have a debt crisis. Aside from 63 banks facing insolvency, we've got a debt crisis. Household American debt hit a record $17.7 trillion. And again, it just feels like everybody's barely hanging on,
Yes, totally right, Rob. And I would say 63% of Americans are still carrying credit card debt from December of 2023, which is a scary number. And with regard to the banking crisis, you put the two together because you look at the amount of defaults on loans as well. So that's another issue as well. Of course, there's this collision with the commercial real estate sector where people are not returning to the offices. Businesses are not able to pay off the loans. They don't want the same commercial real estate. So you're having this confluence. In the end of last quarter of 2023, there were 52 banks at risk. Now you mentioned it was 63. The projection is literally we're going to have one bank a week fail.
I mean, EJ, what do you think this looks like? I mean, everybody for 2-3 years now has been predicting, with the kind of debt we're holding, with what we did to ourselves during COVID, that something's got to be coming. What do you think it looks like, and are we close to it? I've got guys I know in private equity that are telling me that they're smelling like it's getting closer. Something bad is coming. They're feeling that feeling.
Rob, I would not be surprised if maybe it's several months from now, maybe it's a year from now, whatever the case may be, but that they date the recession to starting right around this time. Look at the month of April. Consumers spent more money in terms of dollars, but they actually bought less stuff. And that's what counts when we calculate things like gross domestic product, GDP, when we try to measure how big is the economy, how much economic activity is there actually in the country right now. That is all slowing down dramatically. Let's not forget, consumer spending is somewhere between 2/3 and 3/4 of the entire economy. It's negative right now.
Hillary, final thoughts.
Well, I think the scariest thing is what the White House is going to try and do with the economic levers they can pull this year before the election, because they know that American public votes on pocketbook issues. They just released another 1 million barrels from the Strategic Petroleum Reserve. That is supposed to be there for our national defense. That is really scary. What else are they going to do? Because they've got to keep putting the Band-Aid on the hemorrhage until November. That will put us in a very bad place, I see, for 2025.
Yeah, they got to prop it up any way they can until November 6th. That's all they care about.
Correct.
Keep this thing, just like the president. They got to prop it up, prop up the economy, prop up the president, prop it all up for another few months. Hillary, thanks so much. EJ, good to see you. Thank you both. We appreciate it.